Hello there, I'm Tom Hoskins. I'm the editor for Mining Journal, and I'm here with Stephen Turner, who's Managing Director of Rafaella Resources, which is a junior exploration development company building a portfolio in critical minerals, both on the exploration and development side. So in August 2019, Rafaella acquired its Santa Comba project in northwest Spain, which was a transformational deal for the company. Stephen, can you talk to me a little bit about what you've been up to since then?
Certainly, thanks for that introduction. Yes, the acquisition of Santa Comba was transformational for us, and the focus of the company very much shifted to the development of this project. We are fast tracking it through to production. The initial activities that we needed to undertake was a drilling program. We took on an inferred resource, and it was very clear at the time that we needed to better define that resource in terms of the near surface mineralization. And that's something we did. We immediately launched into a drilling program, and we completed that in March of this year with a 9,000 meter drill program, 65 holes, which led to a mineral resource estimate upgrade that we announced in July. So we took a 5 million ton resource, and we now have a 10.6 million ton resource. 60% of it sits in measured and indicated. And that was critical because we were able to feed that into a mine plan. So the other piece of activity, or the other focus of our attention has been on the putting together of a feasibility study. The mineral resource estimate was key to that, but we also in parallel focused on the process, the metallurgical test work, ore sorting test work, and we conducted that in parallel while we're doing the drilling program. And that all came to a conclusion early this month on the 2nd of December, when we released our pre-feasibility study, which showed extremely strong economics for this project. And look, we've been delighted with the feedback we've had on that. The project demonstrates a very robust operating margin of about 40%. We've got a 5-year mine life at 1.3 million tons per annum. We've got extremely strong IRRs of 120% post-tax. That's based on a realistic forward pricing forecast for our commodity tungsten. So extremely excited about that. I think the one comment I would add is that we've always recognized it's a fairly modest size project to start with. That was always the intention in terms of fast tracking, was to not spend a year, 2 years doing a drilling program to build up a very large resource to then lead on to a feasibility study. What we wanted to do was develop a project that could demonstrate strong economic metrics, and then go back in and expand and improve upon that. And that's what we're looking to do. So a very busy time for us over this last period since we made the acquisition. And the other key changes that we've made since we took on Santa Comba is refocused our portfolio as well. So we exited Sandstone, which is a gold exploration play. We sold that into Westar Resources, which is just now will be listed on the stock exchange this week. So we've been very fortunate. We remain a shareholder in that and have benefited from the excitement around gold. And the other thing we've done is at the end of November, we completed the acquisition of a high-grade sulphide nickel copper platinum group element project in northern Quebec. So now the portfolio consists of a development project in Spain, which we're fast tracking for first production targeted for the end of next year. And then we've got some very, very exciting exploration in Canada. We've got our asset in Yukon that we had from the outset, which is copper, cobalt, and silver. And then we have our new nickel copper platinum group element project in northern Quebec. So some really exciting upside to come.
Okay, and so what are your key milestones and things that you're looking to achieve over the next quarter?
Yeah, so we've put a lot behind us. We've significantly de-risked Santa Comba. But what we need to do now, and we recognize this, we've recognized from the outset, is we need to increase the scale of this project a little bit further. So in early next year, we plan a drilling program. That program is very much targeted on adding to the mine plan. So we're not looking, it's not an exploration program, it's really an infill or step out program, particularly the south of the deposit, which is within the pit limits. that we've already seen and identified very good mineralization. So we'll get in there in January. We'll start the drilling program, and that will add very, very quickly to this project. We'll be able to slot it in and be immediately accretive to the project. So that's one activity that's important. The other one is we're going to continue with our metallurgical test work. So our previous work has given us the basis of a process flow sheet, which we're very comfortable with. It delivers a 70% recovery. But what we believe is we can push that higher. We can push it higher through better recovery of the fines. It's something that in tungsten is a wolframite's a very malleable mineral. It very quickly can turn to fines or slime if you're not careful. It's a common issue in tungsten and tin. We see it around the world. We've taken the lessons from other projects, and we are now putting together an 8-ton bulk sample that's going through to our test lab in the UK through Grinding Solutions, and we'll be focusing very much on boosting that recovery. And interesting, if you look at the PFS, the 1% increase in recovery against our fairly modest reserve base at the moment leads to a $1 million increase in MPV post-tax. So if we spend $100,000 on this met test work, we'll get with a 1% increase, we'll get 10 times our return on investment straight off the bat. So that's a critical item that we're going to do over the next 8 to 10 weeks as well. And the other thing that we'll be doing, which also is near term and exciting, is we will be flying a low frequency heli-EM survey over our new acquisition, Midrim and Laforce in Quebec. This is important because the previous work done on these claims has been always first of all, there was a VTEM flown in the past. It was high frequency and only picked up shallow anomalies. The drilling to date has been always less than 200 meters, even though there's about 45,000 meters of drilling. So it's always been twinning, validation of previous holes. This is an exciting deposit. It's a high grade. We see intercepts of over 5% copper, over 5% nickel in this sulphide deposit. So extremely exciting, but what nobody's done to date is look for the feeder system. And we believe that there should be a source deeper than these high-grade pods that we've seen. And that's what we're going to be targeting with this low-frequency heli-EM. We're going to be looking to fly both claims in late January, early February, process that, and hopefully come out with some very exciting drill targets that we can advance beyond that. So some real strong catalysts for the company going forward, really in the first quarter of next year.
Okay, great. Thanks, Stephen. You mentioned before your acquisition or your entry into nickel, which I'm sure a lot of our readers will have heard a lot about nickel and excitement around EVs and growing demand, and a lot of people tipping it to be the hot metal for 2021. But tungsten, maybe less. Our readers might be less familiar with. Can you talk a little bit about the market and your take on that side of things?
Yes, as a company, we're very interested in looking at commodities in industries and areas that we see have a very bright future. Tungsten is one of those. Nickel's been identified early on because of its key role in the EV industry, as you mentioned. But let me just tackle tungsten for a moment. Tungsten is controlled by the Chinese in the sense they supply 80% of the world's supply. They consume about 55%, and they've been closing down mines in China to bring that back into balance. They're very open about the fact that they're not keen on supplying tungsten out into the global markets. Tungsten is a critical metal. It is used in some strategic applications, from the manufacturing of automobile engines and aircraft engines through to the metals and mining industry and oil and gas, where it's used in drilling, and also in the military. So it's a metal that has the attention right up through into government, and yet there are very few sources in the West for tungsten. And that's what makes the mine in Santa Comba particularly compelling. We're 60 kilometers from a deep water port, very well placed to service Europe, which only produces about half of its demand, and also North America, which has effectively no production whatsoever of tungsten. So we're right on the edge of two major economic regions that simply don't have tungsten and yet need it. So we see it as very positive. So that's why we've moved into tungsten, but we also like nickel. We like nickel. We've liked nickel for some time. no different than the market. We see a growing application for it. And, we're very selective. We're only interested in nickel sulphides. We are interested only in investing in those jurisdictions which are mining friendly. We're not going to look to try to invest in a difficult environment. It's hard enough to get a mine up and running at the best of times. So we're very keen on sticking to areas that we know and understand, like Spain, like Canada, and potentially Australia as well. So these are the sort of areas we'll stick to, and the metals that we're looking at are tungsten, nickel, and possibly tin as well. So, fairly focused in where we're looking and the jurisdictions we'll operate in. And the change in our portfolio that we've done over the last 12 months reflects that strategy going forward.
Okay, fantastic, Stephen. Well, I think that's pretty much all we have time for. So thanks very much indeed for the update, and good luck with everything over the coming months.
Thank you. Thank you for your interest, and I appreciate the time. Thanks. Bye-bye.
Great. Bye-bye.